Okay, getting on to the wages. So the most significant portion of the cost is your wages. Number one question, did you get a T4 slip? Okay. This is, I don't even ask the accountants what wages are anymore. I ask, can I see the T4 slip? Can I actually see it? Show me the T4 slip that was filed. Because a lot of guys say, oh, this guy's salary was this, especially the owners. But if you don't get a T4 slip, it's not salary or wages. And the thing about T4 slips is you report all your T4 income by person to the CRA. So that's the one thing, they already got all the information. You're not going to fudge them on this one ever. They're going to know 100%. Subcontractors, whatever that you pay, they don't have that information. So I mean, you got to provide that for them to figure out anything's wrong. If you play games with the T4s, you put a person's name in, and that name doesn't have a T4 slip, they'll catch that instantly, and they're going to be right on that. So if you don't have a T4 slip, it's not wages. It may be your payment as a subcontractor, but that has completely different tax and reporting implications. So you've got to get that right. Okay, can you allocate to SR&ED activities? So we got a little chart there. Basically, you're doing experimentation, testing, the first two lines of research. Okay? One thing that you want to do is include vacation and holiday pay. So we'll look at a little formula, but basically I'm saying if you look at the definition of salary and wages in the Income Tax Act, it's in section 248 sub 1. It says it's everything in sections 5 to 8 of the Act. Okay, I go to section 5 and it includes vacation and holiday pay. So I say, whoa, wait a second. So if I think I'm paying an employee $30 an hour, because that's what I pay him on his paycheck, it's just, hours times $30, I'd argue for tax purposes in SR&ED, I'm probably paying him or her $33 an hour. And the rationale I'd have for that is that in Ontario, there's 9, let's say 10 stat holidays, so 2 weeks of statutory holidays. And say the average employee gets 3 weeks of vacation pay. So 5 weeks out of a 52-week year, or roughly 10% of the year, I'm actually paying this employee. 5 weeks I'm going to pay them their full wage, and they're not going to come to work at all. I'm paying them for doing nothing. Okay? Well, the courts have said, well, that's actually a cost of the time, that's part of the cost for the other time that they are doing something. So I'm really not paying them $30 an hour, I'm paying them $33 an hour. I have to factor in that extra 10%. All right? So this is something that's often missed. CRA won't correct that for you, but if you get it right, they'll give you the credits, right? Any employee who owns 10% or more of any class of stock of the corporation, or anyone related to them by blood, marriage, or adoption is called a specified employee. And there's special rules to them that you want to be aware of. Okay? And lastly, we want to take the most senior people and give a brief overview of their technical backgrounds, which is now required for the form. So one of the things I like to do is, in our case example, get a list of the employees, highest technical designation, which determines which class. The form actually wants a breakdown of equivalent full-time employees that are Bachelor of Science or equivalent, technology, CET or equivalent, technical, and prototype labor. Particularly if you're going proxy amount, you don't want many of these class C, MBA, accountant, business type people in there, because they really want to focus on the science of it, right? The administrative costs are things covered by the overhead allocation. So again, class C employees are ones that they focus in on is what is this person doing? Are they actually helping with the research, or are they doing administration, which is covered by the proxy election?
Question for you. How do you, if there's, excuse me, people in your company that have been doing the same kind of stuff for 30 years, they don't have their PhD or their PN, what would they fall in that class?
I usually put them as technologists or technician. Yeah. See what kind of stuff they specialize in, right? Because it'll ask them, it actually asks, not only their title, but major area or discipline, right? So I mean.
These guys that are classified as welding engineers, but they don't have their PN.
Right.
But they'll do all the WPSs, PQRs.
Right. I would usually put them as technologist, technician. Again, it's just a statistical thing that they use to measure, but it is required. It is part of the form. So if you don't fill it out and you're past 18 months, it's one of those things where you haven't filed all prescribed information, prescribed form. And CRA is not very amenable to that. In fact, they'll tell you, they'll do whatever they can because they want you to file on time, right? That people who push it to the last minute are the ones who are creating a lot of the problems. Okay, here's a little chart of what's directly engaged. So all of your experimentation, documentation testing, what's eligible for overheads. So things like long-term planning, human resources, writing contracts, who's going to pay us for the R&D, training, stuff like that. That would all be covered by the overhead. And then, what things are clearly out. Sales and marketing activities, things not directly related, preparing user manuals, all stuff that happens after the R&D is done. So those are more the business side. Okay. Now, I'll go very quickly over the complications of how to claim wages. So I actually use this chart because I see this confused as often by accountants as by claimants. And it is very confusing. That if you're a specified employee, that's any employee who owns 10% or more of any class of stock in the company, or anyone related to them by blood, marriage, or adoption. So you've got to be careful. The owner's son, who's on a co-op term there from University of whatever, who's doing whatever, is a specified employee, even though they don't own anything. They're related to someone who owns 10% or more of any class of stock. And they're going to get caught by these rules. Okay? So the rules go as follows. If I'm a specified employee, there's two levels. There's the wages that I claim, and then there's another calculation called the salary base that I multiply now by 55% to get my overhead allocation. That's called the proxy amount, right? So if I'm a specified employee, the maximum amount I can claim as wages for each year is 5 times yearly maximum pensionable earnings. That goes up every single year. It's indexed by the Canada Pension Plan. Okay? So roughly it's around $55,000. So it's roughly the first $560,000 I pay myself each year, I can claim an R&D credit. Right? If I pay myself more than that, I pay myself $500,000, I can get credits on the first $260,000. I can still get a deduction for whatever else I paid as a normal business expense, but after the $260,000, I no longer earn credits on the payments. Now, if I have a non-specified employee, so I hire some wonder kid who's got all these great ideas, and I pay him $1 million a year, but he doesn't own any stock, I claim the whole million. Okay? There's no limit on non-specified employees. It's only specified employees that have that limit. Okay. To confuse it more, any bonuses that I pay to a specified employee don't count. So if I give you a $100,000 salary and a $20,000 bonus, none of that counts for the SR&ED. If you're not a specified employee, I give you $100,000 and a $20,000 bonus, it all counts for your wages. Okay? But I have to pull that bonus out for the salary base to calculate the proxy amount. Okay? Furthermore, for the salary base to calculate the proxy amount, the limit here isn't 5 times YMP, it's 2.5 times YMP. So instead of roughly 260,000, it's roughly 130-something thousand. Okay? So again, you want to be aware of these limits. I've seen accountants make mistakes that think this limit applies here or whatever. I mean, it is very confusing. The number one question I get is, Dave, why is this so complicated? And the answer is, when the Parliament first announced the 65% for the proxy amount, eventually they thought, that's kind of too high. But they didn't want to reduce it like they did now, or announce that they're reducing, so they whittled it down with all these other kind of little transactions or limits or whatever. But there is theory to a lot of it. I mean, the point being that owner managers are more likely to bonus out income or pay excess income to their self as opposed to other employees, right? So they don't really want to pay you on bonuses. What I say here is this really turns the whole tax planning on a more proactive basis. That if I have an owner manager who's involved heavily in SR&ED and then paying themselves huge bonuses at the end of the year that don't count, I say I missed an opportunity here. I could have set your salary last year so that you're at least going to max out the 5 times YMPE. Okay, so I'll say, well, if you're a 50% SR&ED and we want to hit around $250,000 limit, let's pay you a $500,000 salary and we'll pay the other $1 million as a bonus. Okay? You pay the same tax either way. But the difference is, one, you get the credits, and the other, you don't get any credits. All right. So again, that's pretty complicated. This is how I calculate the hourly rate calculation, and an example of how that works. But I think that's fairly straight line. Okay. One of the key things, I know this is probably tricky to read right here, is, okay, timesheets. So I go into companies, and Canada Revenue Agency will tell every claimant, you got to keep timesheets. You have to keep a timesheet. But then they don't tell you what is a timesheet, would be my first question. I ask them, do you have a sample timesheet that you can show it? No, we don't. But you better keep one, or you're not getting it. So they say, okay, here's my timesheet, 8 hours, 8 hours, 8 hours, 8 hours. Well, that's not good enough. It doesn't give us the detail that we need. And this is the circular argument. And we say, well, you don't publish what detail you need, so how can you be specific about it? And let's make a deal. So here's what normally happens. Most systems have first name, last name, hours worked, and project number. They all do that, project number. That's your standard timesheet. I see in every business, little ones, big ones, as soon as they say it. So what's missing? Well, what type of work did you do? There's only 4 types that really count for SR&ED, if you want to go in. The design, the testing, computer programming, or supervision of all the above. That's it. If it's not one of those 4 activities, when you look at all the 8 activities or whatever, they all group into those 4. If you're not doing one of those, it's not SR&ED. Okay? Ideally, can you link it to one of the variables? So if that's communicated, then we're home free, right? Comments, so that's nice to have on the timesheet. And location. This is something that's becoming more and more prevalent. If you're going out of province, or if you're going out of the country, the reviewers are coming in and saying, no, what do you mean you were in Alberta for a month and a half? You don't get any Ontario credits on that. Like literally they're getting that finite. So again, a lot of clients don't have that information. Same point, they say, how much time do you spend outside of Canada? They have a caveat that you can spend up to 10% of your time out of Canada and still included. But once you go more than 10%, that becomes an issue. So again, clients that are traveling a lot and whatever, they often don't record this on the timesheets. So now we got to go to travel logs and airplane tickets and other methods. But it's not something that's within the system, and it tends to cause problems and delays. Okay? All right. So a quick example of how in our case study the wages would go is you separate specified employees from other employees, their gross wages, whether there's any bonuses, and of course that'll be affected, how that's treated will depend if they're specified or not. Okay. What I then do is I take their hours available. The 1888 is something that we calculate, 8 hours a week, 52 weeks a year, and then multiply by how many weeks are in the year for 2015. The computer does all that. So it says that if you make this salary and you work that many hours, your hourly rate is that much per hour. Okay? Times your direct R&D hours will give you R&D wages, and we can also calculate what percentage R&D you are. If someone's 90% or more SR&D, you can claim 100% of their wages. Okay. We talked about reducing the taxable income below $500,000, so you want to make sure it's reasonable. If you don't do this, you got to do it by the time you file your tax return. So once you file your tax return and say, oh man, I should have bonused myself $500,000 or something, I'll go back and do it, it's too late. They have a rule called we used to do that until about 15 years ago. They'd miss it, we'd create a loss in 1 year, carry it back, get them back on site, and then get all the credits reinstated. And then in the late 90s, finance said, oh, we don't like people doing that, so they put a provision in the act called specified future tax consequences. It says once a year goes offside, you can never fix it. That year's offside forever. You can fix the next year, but you've ruined it for that year.